Hello, welcome to today's edition of our class. Last week, we began with regulatory and conceptual framework for public sector accounting in Ghana, which forms about 10% of the weighting in the exams. A quick recap of what we did last week. We got to understand what a conceptual framework is. Now, don't forget that the topic is regulatory and conceptual framework. At the moment, we started treating conceptual framework first, after which we move to the regulatory framework. Okay. We also look at the role of the International Public Sector Accounting Standards Board, IPSAS-B, what they do. And we move on to look at some meanings or definitions, general purpose financial report, and then special purpose financial report, as well as the RPGs, which is recommended practice guidelines. Then again, we looked at the role and authority of the conceptual framework. Then we got to understand the objectives of financial reporting, more especially in the public sector. We look at who the users of financial or general purpose financial reports are. Here, we need to understand those who are primary users and those who are secondary users of financial reports in the public sector. Then again, we went on to look at qualitative characteristics of financial statements or financial reporting in the public sector. We look at, I think, about 6 or 7 of the qualitative characteristics, and then the constraints in attaining these qualitative characteristics. Further, we move on all the way to the key characteristics of a reporting entity. Here we look at what a reporting entity is, the definition, and then the characteristics of a reporting entity. We came through to elements of public sector financial statements, where we look at assets, liabilities, and other definitions in these things. We define them by one. We also move ahead to look at recognition of the elements of financial statement of public sector entities. We look at the recognition criteria and their relationship to disclosure. We define what an element is. Then we also looked at measurement of uncertainty. We ended the class on disclosure and recognition and derecognition. We looked at what we mean by recognition, disclosure, and then derecognition. I also did mention that when we reach the International Public Sector Accounting Standard Board, just like International Financial Reporting Standards, IFRS, or the IAS. These standards are all saying the same thing under 4 headings, which is each standard looks at the measurement criteria for an element of asset or a liability, recognition, disclosure, and deep recognition. So all the standards are talking about these 4 things. And so it's very important that when we reach International Public Sector Accounting Standards Board, for example, when we say International Public Sector Accounting Standards Board 2, 12, 24, what does it say about disclosure? What does it say about measurement? What does it say about recognition? What does it say about recognition? And then sometimes the scope. Examiners can sometimes ask you the scope of a particular standard. Let's say the scope of IPSAS 12 or IPSAS 24, which is about budgeting or budget in the public sector. So these are the 4 main things when we talk about a standard. A student of PSC should or must know. Today, we are going to look at measurement of assets and liability in financial statements. By measurement of assets and liabilities, we mean that if you have your statement of financial position, and you are showing the cost or the value of an asset in your books, on what basis did you determine that cost, and you are showing in your liability the cost of the asset? The same thing applies to liabilities. So in the statement of financial position, you have your non-current assets and you have your PPE. Those individual PPGs in your non-current assets, the cost you have assigned to them and arriving at them, and you are showing them as an asset in your books. How did you arrive at those costs? Same applies to liabilities. So we are moving to measurement of assets and liabilities in financial statements. Here, we are going to look at the measurement concepts that guide the International Public Sector Accounting Standard in the selection of measurement basis for IPSAS. So last week, we looked at the fact that it is the IPSAS board that developed the IPSAS to be used by public sector entities. Now, what are the concepts they use in the selection of measurement basis for the standards that they bring out for public sector entities all over the world to be used, more especially by preparers of financial statements in selecting measurement basis for asset and liability, where there are no requirements in the IPSAS. So here, we are looking at the fact that where the IPSAS does not talk about a particular requirement, then what are some of the key concepts or assumptions that guide this IPSAS board in the selection measurement basis for IPSAS? Now, why is measurement important in the first place? Measurement is important to select those measurement bases that most fairly reflect the cost of service, operational capacity. I want you to take notice of this. The cost of service, operational capacity, and financial capacity of an entity or of the entity in a manner that is useful in holding the entity to account and for decision-making purposes. Yes, so we are saying that it is very important to have a measurement base for assets and liabilities so that the most fairly reflect the cost of services. By cost of services, we are looking at, more especially in the public sector, how much does it cost to buy something? How much does it cost to produce something? For example, Ghana Water, ECG, cost of services. If there's something ECG is going to buy or Ghana Water is going to buy, when they buy, are they going to achieve value for money for anything they're going to buy? And after they buy, even the cost of that service they render to the taxpayers. How convenient is it? Operational capacity and financial capacity, yes. Their operational cost. How much do they incur so much in their variable cost of services, which are incurred on a more regular basis? Financial capacity, are they financially sound? How liquid are they? Would they be able to survive without government subvention? So these are objectives of measurement of assets and liabilities, because these measurement bases are going to help to hold the entity accountable for decision making. So that is the objective of measurement. Now let's look at the measurement basis and their selection. Now, we are going to look at some measurement bases that are identified and discussed in terms of the information they provide about the cost of services delivered by the entity, the operating capacity of the entity, and financial capacity. We saw this not a while ago. So it's now clear that the main reason for measurement basis for asset and liability is to identify and discuss in terms of information they provide about the cost of service delivered by an entity, operational capacity. So anything about measurement basis of assets and liabilities, we are more interested in what? Cost of services, operating capacity, and financial stability. So bear those things in mind, that these are the measurement basis for assets and then liabilities. Okay. Now, these measurement bases we are going to look at are historical cost, market value, replacement cost, net selling price, and then value in use. So like I did mention that the main basis of the main reason for measurement for liabilities and assets, we are looking at cost of service delivered, operating capacity, and then financial capacity. These are the things we are looking at the most. And then the extent to which they provide information that meets qualitative characteristics. So if we look at here, it's saying that the measurement basis for assets we've seen that the measurement basis for assets here is assets. They are the historical cost, market value, replacement cost, net selling price, and then value in use. Then when we come all the way down here, it's in the measurement basis for liabilities. Now, I want you to pay attention here. If you look at the measurement basis for assets, historical cost, market value, replacement cost, net selling price, value in use. But go and look at liability, historical cost, cost of fulfillment, market value, cost of release, and assumption price. Here, we are going to match the measurement basis of asset to that of liability. So the measurement basis, historical cost for asset, we match it to historical cost for liability. Market value, we match it to cost of fulfillment. Replacement cost, market value. Net selling price, cost of release, and then value in use, assumption price. We are going to look at these things one after the other under each of assets and the liabilities. So the top one here are for assets, measurement basis for assets, and those down here are the measurement basis for liabilities. But before then, let's look at something called entry values and then exit values. After looking at entry values and then exit values, we can fix any of these under assets and any of these under liabilities as either it is an entry value or an exit value. So after going through entry and exit value, you will be able to know that the historical cost of an asset, is it an entry value or an exit value? The value in use of an asset, is it an entry value or an exit value? Okay. So measurement basis may provide either entry or what? Exit values. Yes. So for assets, entry values reflect the cost of purchase. Yes. So for assets, entry value reflects what? The cost of purchase. It's very simple. Entry value. And they are saying for asset, entry value reflects the cost of purchase because at the time of acquisition of an asset is a time that you have entered or recognized the asset in your books as an economic resource that belongs to you, of which you are going to derive future economic benefits as a result of what? Past transactions. So measurement basis may provide either entry or exit values. For asset, they are saying that entry value reflects the cost of purchase. Now, with the cost of purchase reflects an entry value for an asset, what do you think will happen when an asset is disposed of or is being derecognized or retired from your books? Obviously, that's going to be an exit value. Okay, let's continue. Historical cost and replacement costs are entry values. So get one here. Historical cost and replacement cost are entry values. You will come and look at what historical cost and replacement costs are. They are saying all these are entry values. Now let's look at exit values. Exit values reflect the economic benefit from sale. Yes, reflect what? Economic benefit from sale. So an example, asset disposal. After you have used the asset over its estimated useful life, having provided depreciation, and now sell the asset and the asset leaves your books. And there is an economic benefit from that sale, then that is an exit value. So an exit value also reflects the amount. An exit value also reflects the amount that will be derived from the use of the asset. Yes, pay attention to this one. An exit value also reflects the amount that will be derived from the use of what? The assets. So in a diversified economy, entry and exit prices differ as entities typically. One, acquired asset tailored to the entity's particular operating requirement, for which other market participants will be unwilling to pay a similar price and then incur transaction costs to acquisition. Okay, so we've now looked at what an entry and exit value is. Now, we are saying that measurement basis for liability may also be classified in terms of whether they are entry or exit values. So you see, in as much as we have entry and exit values for asset, we do have the same for liabilities, like I mentioned earlier. So entry values relate to transactions under which obligation is received. Entry value, transaction under which obligation is received. So at a point in which you acquire a loan, a liability, where you accept all responsibilities and obligations associated with the loan, that becomes an entry value, or the amount that an entity will accept to assume a liability. Yes, the amount that an entity will accept to assume a liability. Now, we are saying that exit values reflect the amount required to fulfill an obligation or the amount required to release the entity from obligation. So where you have finally paid off or have accepted to clear your debt or obligation, then that reflects an exit value. So we have entry value and exit value. Let's go and look at entity specific and non-entity specific measures. So measurement or measures may also be classified as to whether they are entity specific or non-entity specific. When we say a measurement basis is an entity specific, it reflects the economic and current policy constraints that affect the possible use of an asset and the settlement of liability by an entity. It's very simple. Entity specific reflect the economic and current policy constraints that affect the possible uses of an asset and the settlement of a liability by an entity. So an entity-specific value also reflects economic opportunities that are not available to other entities and risks that are not experienced by the entity. by the entity. Entity-specific reflects economic opportunities that are not available to other entities and risks that are not experienced by the entity. So then what are non-entity specific measures? This one reflects general market opportunities and risk. So you see, the entity specific measures reflect the economic and current policy constraints that affect the possible use of an asset and assessment of liability. But when you look at non-entity specific, these measures reflect general market opportunities and risk that the entity has no control of. Now, the decision as to whether to use entity specific or not is taken by reference to the measurement objective and qualitative characteristics discussed above. Okay, now that we have looked at entry and exit value, and then entity specific and non-entity specific measures, let's now come back to the measurement basis of asset I talked about a while ago. So after every measurement basis, you should be able to tell whether this one is an exit value or an entry value. So the first measurement basis for assets is historical cost. When we say historical cost, we are going to look at the historical cost of an asset. Now, the historical cost is the amount of money, or more technical, the consideration you gave to acquire or develop an asset. So if you have an iPhone, you want to circle and put an iPhone, 15,000 Ghana cedis. You bought this phone last year, 15,000 Ghana cedis. Today, you have the phone with you as a property. We're talking about the historical cost of that phone. The 15,000 you pay last year to acquire the phone. So it's the consideration given to acquire or develop an asset. So develop an asset, it could be a building. You put up a structure on your land 3 years ago, which is the cash or cash equivalent, or the value or the consideration given at the time of the acquisition of the development. Now, historical cost is an entry and entity specific value. Yes. So you see, you have to pay attention here. All the measurement basis for assets and liabilities. I will not be surprised if the examiner can ask you that classify the following measurement basis for assets as either an entry value or entity specific value. So under historical cost model, assets are initially reported at cost incurred on their acquisition. Yes. In your balance sheet, you only show cost of the assets or the cost at which you bought the assets. Subsequent to initial recognition. So after you have recorded the asset at cost, subsequently, this cost may be allocated as an expense to reporting period in the form of what? Depreciation or amortization for certain tangible assets or impairment. So first, under historical cost, all assets are recorded initially at cost. The subsequent to initial recognition, the cost of the assets may be allocated as an expense over the useful life of the asset, term as what? Depreciation. Okay. Following initial recognition, the measurement basis of an asset is not changed to reflect changes in prices or increases in the value of the asset. So we are saying that under historical cost model, the amount of an asset may be reduced by recognizing what? Impairment. What is an impairment? You might have heard this. Impairment is the extent to which the service potential or ability to generate economic benefit provided by an asset have diminished due to changes in economic or other conditions as distinct to their consumption. And this usually involves an assessment of their vulnerability. So that is it for historical cost. Under historical cost, we look at the consideration or the money equivalent or the cash and cash equivalent given to acquire or develop an asset. We are saying that historical cost is an entry and entity specific what? Value. Pay attention that in the exams they can give you a statement for you to determine which measurement basis of assets should be used. So it can give you 4 statements. Then you will say this one historical cost or otherwise. Let's move on. Now let's look at current value measurement. Yes. When you hear current value measurement, you're talking about today or now. Now, the opposite of current value measurement is what? Historical cost. Remember I said you bought an iPhone last year in Circle at a cost of 15,000. But today, if you want the cost of that same phone, how much is it? We are going to look at current value measurement. So what is current value measurement? These measurements reflect the economic environment prevailing at the reporting date. Yes. So you might have bought a phone 15,000 a year ago, but today, what is the economic environment prevailing as at the time you are preparing your balance sheet and you are telling me you have an iPhone and it costed you 15,000? So there are 4 current value measurement basis for assets we are going to look at. These are market value, replacement cost, net selling price, and then value in use. So when you come here, the one we look at for asset, historical cost stand on its own. Then we can reclassify 1, 2, 3, 4 as what? A current value measurement. So that say you have only 2 measurement bases, but under the current value, you have 4 value measurements under them. Here, current value measurements. So let's look at market value. Market value. When we say market value, we are looking at the amount for which an asset could be exchanged. The amount for which an asset could be what? Exchanged between knowledgeable willing parties in an arm's length transaction. The amount for which an asset could be exchanged between knowledgeable willing parties in an arm's length transactions. Here, pay attention to this. Exchange between knowledgeable willing parties in an arm's length transaction. I'm going to explain. Between knowledgeable willing parties means that here all the parties to a transaction or to an acquisition of an asset are sound people who have knowledge about the cost or the price of the asset being traded. So here we are not looking at an experienced or an expert who is trying to sell something inferior to a minor or somebody who is insane. No. We are looking at that between knowledgeable people. They are at the same knowledge or expertise. They know how much an iPhone costs today, how much a Toyota costs today. They are knowledgeable and they are willing. The sale is not made out of what? Cohesion. Willing parties. In an arm's length transaction means this transaction is done between independent parties and not related parties. What do I mean by related parties? A company selling to a subsidiary or its branch, or a husband selling to the wife. These are related party transactions. An arm's length transaction is a transaction that is made between independent and unrelated people. So not like a company head office selling to a sister company or whatever. That's the meaning of what? Market value. The phone you bought today, if I step into Kantamanto or Circle, how much will it cost? All right. At acquisition, market value and historical cost will be the same. Yes. If you are going to buy the iPhone today, then the market value and the historical cost of the assets will obviously be the same thing. And that is if transaction costs are ignored and the transaction is an exchange transaction. I think I explained an exchange transaction, but let me say an exchange transaction is a transaction in which the parties get a direct benefit in return for anything they have exchanged. An example of a non-exchange transaction is a payment of taxes. When you pay taxes, you don't get to enjoy the benefits of the tax you've paid to the government directly. So that's a non-exchange transaction. Okay. So that is what market value. Now let's look at replacement cost. Replacement cost. Now, a public educational unit or a school might have furniture in the classroom. They might want to change the furniture in the classroom. They bought the furniture 200 cedis per desk 2 years ago. If they want to change the furniture, what is the cost of replacing or changing the furniture today? That is replacement cost. Replacement cost is the most economic cost required for the entity to replace the service potential of an asset at the reporting date. Yes. The most economic cost required for the entity to replace the service potential of an asset at the reporting date, or of an asset which includes the amount that the entity will receive from its disposal at the end of its useful life. Yes. So here, when we talk about current value measurements, we are saying that it is the most economic cost required. So the headmaster wants to make a decision. How much will it cost us per desk to replace all those furniture in the classroom today? Here, the historical cost of the furniture will be irrelevant in decision making. The market value will also be irrelevant. What will be more relevant will be how much it will actually cost us to replace those desks in the classroom. That is replacement cost. Now, replacement cost differs from market value. Yes, so like I mentioned, we are going to look at how different is replacement cost from market value. Replacement cost differs from market value because in the public sector, it is explicitly an entry value that reflects the cost of replacing the service potential of an asset. When we say replacing the service potential of an asset, what we mean is that, we are buying them in to replace old ones for the new one to come and perform what they were performing. Is that all right? Okay. Then again, replacement cost differs from market value because it includes all the costs that will necessarily be incurred in the replacement or the saving potential of an asset. Yes. So sometimes the market value is what is generally known as pertaining in the market. But if we are to replace it today, from the cost of the asset to all any other incidental cost, how much will it be? And that is replacement cost. And that's why we are saying that it includes all the costs that will necessarily be incurred in the replacement of what saving potential of an asset. And then lastly, it is an entity specific and therefore reflects the economic position of the entity rather than the position prevailing in a hypothetical market, like I mentioned. That the market value is a hypothetical value known in the open market. So for example, the replacement cost of a vehicle is less for an entity that usually acquire a large number of vehicles in a single transaction and is regularly able to negotiate discounts than for an entity that purchases vehicle individually. Yes, so there you go. You see how clear the explanation is. That the replacement cost of a vehicle is less for an entity that usually buys in bulk, in bulk quantities of vehicle in a single transaction, and is regularly able to negotiate discounts than for an entity that purchases vehicles individually. What it means that the replacement cost for a company or public sector entity that will buy large quantities of assets will be substantially different from an entity that buys them individually. Now let's look at net selling price, which is also a current value measurement. Net selling price, we are looking at the amount at which the entity can obtain from the sale of the asset after deducting the cost of sale. The amount that entity can obtain from the asset or from the sale of an asset after deducting the cost of sales. So for example, you have a land, you have a building, you want to sell. Now, before you'll be able to sell, perhaps you might need an agent, auctioneers, you might need some technical experts. Sometimes you might even have to move the asset and go and assemble it somewhere. So all these things are called cost of sale. The cost you incur in selling the asset. So we are saying the amount that entity can obtain from the sale of the asset after what? Deducting the cost of sale. So if the asset is 1 million Ghana cedis, and before you'll be able to sell this asset, it will cost you around 100,000 before you'll be able to sell. So 1 million Ghana cedis minus 100,000, the figure you get, or the 900,000, is what we call net selling price. So net selling price differs from market value. Yes, we are saying net selling price differs from what? Market value. To the extent that This one does not require an open, it does not what? Require an open, active, and orderly market, or the estimation of a price in such a market that entity includes the entity's cost of sales. Yes. Net selling price therefore reflects constraint on sale, and therefore it is an entity specific value. Value in use. Value in use. Here, we are going to look at the present value to the entity of the asset's remaining service potential, or the ability to generate economic benefit if it continues to be used. Anytime you hear present value, what comes into your mind? Discounting. So the present value to the entity's assets remaining useful potential, remaining service potential, or ability to generate economic benefit if it continues to be used, and of the net amount that the entity will receive from disposal at the entity's useful life. The present value of the asset's remaining service potential, or the present value of the remaining useful life of the asset. Sometimes you buy an asset to be used for 5 years. If you use the asset for 2 years, you are left with 3 more years to use the asset. Now, if we are to determine the remaining useful life of 3 years, the benefit you get, if you are to determine the benefit today, what will be the value? That's the meaning of the present value to the entity's assets remaining useful, remaining service potential, or ability to generate economic benefit. It continues to be used. Now, how suitable is value in use? Value in use is an entity-specific value. So pay attention to how all the measurement bases are being classified as either entry or entity-specific or non-entity. So it is an entity-specific value that reflects the amount that can be derived from an asset through its operation and its disposal at the end of its useful life. The value that will be derived from an asset is often greater than its replacement cost. Very true. So that is suitability of value in use. Now that we are done with the measurement basis for assets, let's look at that for liabilities. So let's look at historical cost. The historical cost for a liability is the consideration received to assume an obligation. Like I mentioned, if you go for a loan, 10 million Ghana cedis, you have received money or consideration. As at the time you went for the loan 2 years ago, how much did you receive? You have received this money to assume what obligation? What is this obligation? This obligation is for you to pay principal and interest, which is the cash or cash equivalent or the value of the other consideration received at the time the liability is incurred. So under historical cost model, initial measures may be adjusted to reflect such factors as accrual of what? Interest, the accretion of discount, or amortization of a premium. Now, where the time value of a liability is very material, for example, where the length of time before settlement falls due is significant, the amount of the future payment is discounted, so that at the time a liability is first recognized, it represents the value of the amount received. So, for example, if liabilities are due in future period, we want to know how much of that future period is due presently. All right. The difference between the amount of the future period and the present value of the liability is amortized over the useful life of the liability, so that the liability is stated at the amount required at the amount of the required payment when it falls due. So you might have a loan, 10 million, though it will be due in some future periods. You want to know in this future period how much is due presently or currently. So we will map the historical cost of liability as same as historical cost for what? Asset. Now let's look at cost of fulfillment. So cost of fulfillment, if we want to look for its equivalent for assets, is going to be what? Market value. Is going to be market value. Let's continue with cost of fulfillment. The cost that the entity will incur, the cost that the entity will incur in fulfilling the obligations represented by the liability, assuming that it does so in the least costly manner. That is cost of what? Fulfillment. We are saying the cost that the entity will incur in fulfilling the obligation represented by the liability, assuming that it does so in the least costly manner. Here, where the cost of fulfillment depends on certain future events, then all possible outcomes are taken into what? Account in the estimated cost of fulfillment. Cost of fulfillment. The market value of liabilities. The amount for which a liability could be settled between knowledgeable willing parties in an arm's length transaction. Anytime we are defining liability, don't forget certain keywords: knowledgeable, willing parties, arm's length transaction. The advantages and disadvantages of market value for liabilities are the same as what? Those of assets. Such a measurement basis may be appropriate, for example, where a liability is attributable to changes in a specified rate, price, or index quoted in an open, active, and orderly market. Okay. So I think it's the same thing here. That is a repetition. Let's move on to cost of release. Cost of release. Cost of release is a term used in the context of liability to refer to the same concept about net selling price. So you see, I told you that we can match the measurement basis for an asset to that of a liability. It's just that the names are different. So let's go and look at net selling price. How did we define net selling price for assets? We said net selling price is the amount that the entity will obtain from sale of an asset after what? Deducting the cost of sale. So if you want the offset of net selling price for a liability as a measurement basis, you are told it is what? The cost of release, which is the same concept as what? Net selling price. What then is the cost of release? The cost of release refers to amount of an immediate exit from what? Obligation. So here, your ability to pay off your debts so that you'll be released of any obligation that is due. Cost of release is the amount that either the creditor will accept in settlement of its claim or a third party will charge to accept the transfer of liability from the obligor. Yes. Going for a loan. And how much, after all events, is the person who gave you the loan or the creditor willing to accept so that you will be relieved of any obligation? Where there is more than one way of securing release from the liability, the cost of release is that of the lower amount. This is consistent with the approach for what asset where net selling price will not reflect the amount that will be received on sale to scrap a dealer. Assumption price. Assumption price refers to the same concept as what? Replacement cost for assets. Just as replacement cost represents the amount that the entity will rationally pay to acquire an asset, so its assumption price is the amount which the entity will rationally be willing to accept in exchange for assuming a liability. Exchange transactions carried out on arm's length terms will provide evidence of the assumption price. This is not the case for non-exchange transactions. Very well. Now that we have looked at the measurement basis for assets and liabilities, we are going to look at one of the contents of a financial report. You all agree with me that one of the contents of a financial report or statements are the statements of financial position, statement of profit and loss, and other comprehensive income, as you may say, but in the public sector, so mostly the statement of revenue and expenditure. Then we have statement of cash flow, statement of changes in equity, and then notes to the financial statements. At this juncture, our focus is only going to be notes to the financial statement and how important is this note. Don't forget, we've already looked at what? Disclosure last week. So let's look at notes to the financial statement and how important they are. This could feature in an exam question, I must say. So the level of detail provided by disclosed information contributes to achievement of objectives of what? Financial reporting. Yes. What does it mean? It means that the amount of explanation, detail, and other information we give to the financial statements will help to achieve the objectives of what? Financial reporting. Without being excessive, without bringing irrelevant information as part of the note. So disclosed information like displayed information is necessary for achievement of objectives of what? Financial reporting. Information disclosed in the note of the financial statement. Information disclosed in the notes to the financial statements. So we are going to look at the importance. It's necessary to a user's understanding of what? Financial statements. So these are the importance of preparing notes to the financial statement. It is necessary to users' understanding of financial statements. It provides information that represents financial statements in the context of the entity and its operating environment. Sometimes certain information cannot be provided on the face of the financial statement, or even where they can. Sometimes there is a need to have a breakdown of the figures that are on the face of the financial statement, so users will be able to understand. So, for example, if you mention revenue in the statement of profit and loss and other comprehensive income, or statement of revenue and expenditure, revenue is revenue. But until somebody goes to the notes and see the breakdown, then the person will know the context of the entity and its operating environment. So, oh, they are the company, they are into this. So the breakdown in the sales revenue or your cost of sales and other information will even let the user know the industry in which we are operating. Then the notes generally will have a clear and demonstrable relationship to information displayed on the face of the financial statement to which it pertains. What are some of the information that may be disclosed in the notes? 1. Entity-related factors that will influence judgment about the reported information. For example, information about what? Related parties and controlled entities or interest in other entities. So sometimes when you are reporting, unless you report in the notes, certain information about you having other branches or related parties might not be known. So other information that are usually included in the notes, the basis for which it is displayed. An example is information on accounting policies and what? Measurement. We look at accounting policies and measurements later in the course under one of the IFSAs. Then disaggregation of amount displays on the face of the financial statement. An example is breakdown of what? PPE, property, plant, and equipment into different classes. Then items that do not meet the definition of an element or recognition criteria. Yes, we've done elements. So any item or information that do not meet the definition of an element or recognition criteria, but are important for a user to understand the entity's finances and other, then it must be disclosed. An example is information about events and conditions that might affect future cash flows or service potential. And then lastly, information that may explain underlying trends affecting displayed totals. So decision about what information needs to be displayed and disclosed involve consideration of the objective of what financial reporting, the qualitative characteristics and constraint on information included in general purpose financial statement, and the relevant and other economic phenomena about which information may be necessary. Now, we are done with conceptual framework. But before then, let's look at how the examiner have asked the questions in the past. Some of them I'll refer you to the notes for the solution. Some of them have been answered. So the first one, remember I mentioned last week that sometimes you will not be asked straightforward questions, but it should be put in a scenario or case form. Then the question will be asked. It boils down to the same thing. So the question, an accounting training has been given an assessment to prepare a complete set of financial statements of a public sector entity from from data set provided by the Director of Finance. The training prepared the financial statements to the admiration of the director, except that no notes to the financial statements were prepared. The director made him aware that the notes to the financial statement are essential components of the financial statement, whether applying the cash basis of accounting or accrual basis of accounting, as it enhances the usefulness of financial reports to users. The training has been directed to you to educate him further on the relevance of notes to the financial statements. So you see, the whole question is to require you to educate him further on the relevance of the notes to the financial statements. And this is a November 2019 ICA past question. Okay. Required. Write out your explanatory notes to the training. The usefulness of notes to the financial statements and the information that should be included in the notes to the financial statement of a public sector entity. 4 marks. And dear students, if you are able to score this or pick all these 4 marks, you are left with 46 marks to be called a chartered accountant, and you move on with your life. Refer to the notes for solution to this question. Another question. Measurement of assets for recognition in the financial statement is a critical consideration in financial reporting and has been problematic in the public sector given the nature of assets involved. A public sector organization is currently in transition from cash-basis accounting to accrual-basis accounting, which require measurement and recognition. So you see, which requires what? Measurement and recognition of all assets in the general purpose financial reports. Of much concern to the entity is how to select the appropriate measurement basis. Appropriate measurement basis for the assets of the entity listed below to ensure that the objectives of financial reporting are achieved. So these are the human resource software developed by the entity. So look at this, human resource software developed by the entity. The measurement basis for assets that we have looked at a while ago. Which one of them are you going to measure the human resource software developed by the entity? Which one of them are you going to use to measure stocks of books in the library? Then vehicle donated to the entity. Think around historical cost, replacement cost, and then market value. I continue the question, though I have given you a hint or a clue to the question. You've been consulted on the issue raised above to help the entity choose appropriate measurement for the recognition of the above asset list of the above listed assets. And this is an ICAG November 2019 past questions. Now, what's the requirement of this question? In line with conceptual framework, so you see, in line with conceptual framework for general purpose financial reporting by the IFSAS board. 1. Discuss the objective for measurement of assets in financial statement that should guide the choice of measurement basis for asset recognition. Discuss the objective for the measurement of assets in financial statements that should guide the choice of measurement basis for asset recognition. Please refer to the notes. We've done this either, I think, last week, 12 April 2025, or today. So when we refer it, the solution is there. I suggest an appropriate measurement basis for each of the assets indicated above. So they are referring to this one. They are referring to this one. And discuss how your selected measurement basis meets the objective of measurement in each case. Refer to the notes for solution. Okay. Question 3. Ghana is determined to implement an accrual-based accounting policy to enhance accountability and aid decision-making in the public sector. This is an ICAG November 2021 question. Required. Explain the policy implication on 4 measurement bases in the public sector. Explain what policy implication on 4 measurement bases in the public sector accounting as a result of the adoption and implementation of accrual basis accounting. 10 marks. This one, I think I have solved it, or the solution is here, so we will look at it. Question 4. General purpose financial reporting is concerned with provision of information to users for accountability and decision-making purposes. It is said that financial reporting is not an end in itself, but a means to an end. However, this does not mean that every public sector entity is a reporting entity. Required. In reference to the conceptual framework of general purpose financial reporting, 1. Explain the information needs of 5 primary users of general purpose financial statements. 7 marks. So you see, I discuss the statement. This does not mean that every public sector is a reporting entity. We've looked at reporting entity and then the characteristics of a reporting entity. So you see, these questions are all things we just done or talk about. Okay. Question 5. The conceptual framework classifies users of public sector financial information into primary users and others. August 2022 ICAG question. Required. Identify 3 primary users and their information needs. We've looked at it, so refer to the notes for solution. Question 6. Ghana signaled the adoption of IFSAS in 2014, and the IFSAS implementation committee was formed subsequently. Unfortunately, the implementation of IFSAS is yet to be realized, and this has become a concern to many public financial management observers. Meanwhile, those who oppose the adoption of IFSAS in developing countries feel vindicated. ICAG August 2022. Answer is provided. Required. Discuss 4 arguments against the adoption of IFSAS in developing countries. 4 marks. Recommend 4 strategies in ensuring effective implementation of IFSAS. 6 marks. Okay. So solution to question 3. What does question 3 say? Question 3 say that explain the 4 policy implication. Explain the policy implication on 4 measurement bases in public sector accounting as a result of the adoption and implementation of accrual basis of accounting. So it's all about what? Historical cost. So the preamble, the measurement basis of asset and liability have implication for cost of service, operational capacity. Do you remember these things somewhere? Operational capacity, financial capacity, as well as qualitative characteristic of financial information. Historical cost. The cost of an asset, the consideration given to acquire an asset, which is the cost. So you see, that is that. To explain historical cost, market value, and replacement cost. So these are the requirements of this question. Question 3. Question 3. Where is it? Question 3. Explain 4 implications on 4 measurement bases in public sector as a result of adoption and implementation of the accrual basis of accounting. This question is never asking you anything about accrual basis, but it's rather asking about measurement basis in the public sector. Is all right? So that's question 3. I'm just asking you to explain the measurement basis which we've looked at already: market value, replacement cost, net selling price. I mean, these are all what the question is demanding from me. So cost of fulfillment, cost of release, assumption price, they are all the solution to question 4I and II. Okay, that question is about information needs of primary users. So citizens, parliaments, citizens or parliament. So citizens require financial information for accountability and what? Decision-making purposes. They require information that assists them in assessing the accountability of government and other public sector entities, your MP. So these are the primary users: taxpayers, citizens, investors, donors and sponsors, creditors and who? Lenders. Okay. Now, the next question is about key characteristics of a reporting entity. We've looked at this already, but the solution is here. There is an entity that raises what? Resources from or on behalf of constituents and or uses resources to undertake activities for the benefit of or on behalf of those constituents. We looked at this last week on the 12th of April. So that is the characteristics of a reporting entity. Then solution to question 6, which was about argument against the adoption of what? IPSAS, sovereignty of nations. Here we are looking at every country is deemed to be what? Independent and sovereign and powerful on its own. And so a group of people cannot sit anywhere and prepare a standard that all countries should use. So every country is sovereign state capable of making rules that govern how resources and such should be accounted for. Therefore, adoption of IPSAS is unnecessary. Yes, these are some of the implementation challenges of IPSAS. And then the cost of implementing is very high. There's always a conflict between requirements of the laws and that of IPSAS. Yes. Don't forget, we are doing conceptual framework. We will come to regulatory framework. They are 2 different things, but the same topic. It's regulatory and conceptual what? Framework. Okay. Then lack of capacity to implement IPSAS successfully. I mean, developing countries, as far as Ghana is concerned, do not have the capacity to implement what? IPSAS, because we lack the resources and the expertise required. Complexity of the standard. Yes, you see, the IPSAS is not very easy as you see it. When we begin doing some of them, it sounds so confusing. And so this makes their implementation very difficult. So what are some of the strategies for ensuring effective implementation of this IPSAS? We need to what? Lobby for high-level political support so our country's politicians will accept them. Then carry out legal and legislative reviews. What the local law says must be made in line to agree with what IPSAS. And then we have to train key personnel or people who are using this IPSAS in preparing financial statements. And we also need to develop an accounting and procedural manual and develop a comprehensive implementation plan. Okay. By and by, that brings us to the end of the conceptual framework. The conceptual framework. Now, we are moving to the regulatory framework. So let me explain. The conceptual framework more talks about the IPSAS and seek to bring about harmonization due to globalization so that entities will prepare their general purpose financial reports in line with a globalized standard or the IPSAS. But when we talk about regulatory framework, so remember I said the topic is regulatory and conceptual framework. We are now looking at conceptual framework. Now we are going to look at the regulatory framework. The regulatory framework usually has to do with country-specific laws that guide the preparation of general purpose financial report. So, for example, we have International Public Sector Accounting Standard 24, which is about budget. That is the IPSAS. But when it comes to Ghana locally, what does our laws say about the preparation of what? A budget. We have a local law that talks about how financial reporting should be done, who and who are to prepare the budget, what is the form, what is the measurement basis, and I mean all those that, what are the local laws saying? So regulatory framework for Ghana might be different from the regulatory framework of who? UK or South Africa or the US. But the IPSAS or the conceptual framework are usually what? The same. So we are going to look at public sector financial laws and administrative what? Rules. That is the regulatory framework for general purpose financial reporting in the public sector. So apart from what the IPSAS board are saying, countries also have laws which provide framework for financial reporting. Now, the legal or regulatory framework for general purpose financial reporting in Ghana is guided by so many laws and regulations, and they can be found in certain legislations which I shared to you on your WhatsApp last week. I have shared with you the Public Financial Management Act, Act 921, 2016, the Public Financial Management Regulation, LI 2378. I have shared with you the 1992 Constitution. I have shared with you the Public Procurement Act and the amendment in 2016 as well. I have shared the website of Ministry of Finance and Economic Planning, the website of Controller and Accountant General, more especially the Chart of Accounts classification. I've shared with you the website of Public Procurement Authority. I've shared with you the Internal Audit Agency Act. I've shared with you the Audit Service Act. In fact, all these pieces of legislation I've shared with you come to sum up what we mean by regulatory framework. And I encourage and advise you to sometime log on onto this site of state regulatory institutions, because they publish current affairs documents that are important. I mean, the national budget, you can get pieces of bulletin there to read. And examiners sometimes, some of those current affairs, they ask questions from there. So, for example, if you're a student and in the Public Procurement Act, if you go to the Public Procurement Authority website, you will find it there. And you just read. Sometimes, how some of their reports are published or how they do their things, then the examiner will bring a summary or a simple form of it in the exams. Let's assume you don't work in controller, you don't work in Ministry of Finance. How would you know? Let's assume the particles you solve, some didn't happen to come. But once you log on to read a few, then you know the trend. Oh, okay, I visited Controller and Accountant General. I saw the chart of accounts. Oh, this is how it looks like for revenue and expenditure. Oh, that's nice. Oh, okay, I visited public procurement. I saw the threshold for the procurement of goods, service, works, and others. Yes, so those things I shared with you on the WhatsApp are very, very important, and you need to take note of them. More especially the Audit Service Act, the Internal Audit, the PFM Act. Some of them are just pieces of legislation. They are not even up to 150 pages, some of them. So please read. Now let's look at the 1992 Constitution. What does the 1992 Constitution say about financial reporting in the public sector? The Constitution provides an overarching legal framework for governance, including what? Financial management and reporting in the public sector. Is that right? Okay. The Constitution also outlined the roles and responsibilities of various public officers. Example, what are the roles of the President, the Minister of Finance, the Chief Director of the various ministries? What role do they play in budget preparation? What is the role of the Controller and Accountant General? What is the role of the Auditor General? How do they ensure sound financial management in the public sector? So these are provided for the regulatory framework of Ghana and not any particular IPSAS. So the role of a principal account holder, the role of a spending officer. What does the Constitution say about their roles in safeguarding state resources? Okay. So the Constitution provides the role and responsibility of various public offices and institutions in ensuring transparency and accountability in the use of public funds. I mentioned this Public Financial Management Act, 2016 Act 921. Please, I have shared this with you. Find time to read. Though we will do it, we will look at majority of the sections here when we are doing public sector budgeting. But I encourage you to read ahead. Now, what is the PFM Act about? This act governs management of public funds in Ghana. And its main aim is to ensure efficient and effective use of what? Public resources, enhance accountability, and provide financial reporting. It sets out the responsibility of government officials, the process for budget preparation, execution, monitoring, and reporting. Yes, we will look at this one in detail later, the PFM Act, when we are doing budgeting. So this, you see, in the exams, the examiner can ask you that, what are some of the regulations that seeks to ensure judicious use of public funds? It will be ideal if you are able to put a particular section in this Act, Act 921, 2016, for the examiner to know that, yes, you've actually read the Act. You even know that an Act called 921 exists. Some students enter into the exam and they don't even know. They haven't even heard of Act 921 before. What are the objectives of this Act? Is to regulate financial management of public sector within macroeconomic and fiscal framework. We will define these terms later in the lecture. Then this Act also seeks to establish a framework to support a sound fiscal policy and macroeconomic management. To also processes for the preparation, approval, and management on transparent, credible budget. Yes, everything about budget preparation can be found in this Act. So these are what regulates. In fact, there are sections in the Act for all this, and so when we are doing budgeting, we will come to that. Then I mentioned this Public Procurement Act as amended. So the principal act is Act 663, 2003, and has been amended in 2016. I have pasted this on your WhatsApp page. If you do not find, go to the public procurement website and click forms or publications or documents. You see them there. We will look at Public Procurement Act in detail when we are doing public procurement as well. What is the main aim of this Act? This Act regulates procurement processes. It regulates procurement processes in the public sector to ensure transparency, fairness, and value for money. We will look at value for money later. Financial Administration Regulation Act. This one has been repealed, and so it will not be there. The Other Service Act, I have sent it to you. It's there. We will look at it later. But the Act establishes the Other Service and outlines its function and powers. Now, the summary of this Act is that it mandates the audit of public accounts and provides guidelines for the preparation of submission of audited reports. The Auditor General is responsible for auditing all public accounts in this country, including the military, Ghana Police, any public office. Then the Companies Act. These ones are for state-owned enterprises. Though it is primarily applicable to the private sector entities, this Act is also for what? State-owned enterprise, SOEs. Yes, those that do not receive any subvention from government or are not funded by government, but are required to generate their own income, contracts in their name, own assets in their name, pay their workers, and are set up as what? Legal entity, though they belong to the state. All right. So we are going to look at the nature and purpose of assets and liabilities in the public sector. In the public sector, just like private sector entity, they have assets. And some of these assets can be what? Tangible assets. Tangible assets could be infrastructure as roads, bridge, public buildings, and other assets that are owned for providing public services. Then equipment, machinery, vehicles, all those things are all public assets. Then public also has some what? Lands used for parks, departments for parks and gardens, all those things. Intangible assets. Yes, public sector also do have some intangible assets. What are some of them? Software and licenses. Intellectual property. Talk about all those intangibles. Patents, copyright, trademarks. Then financial assets. Try and know the difference between financial assets and then non-financial assets. Financial assets are about cash and cash equivalents, investments, receivables. Receivables are debtors. Yes, some people owe the government, and once you owe the government, you are a debtor or a receivable to the government. These are financial assets. What are these assets used for? Service delivery, public welfare, economic stability, revenue generation. All these assets are used for the reasons I've mentioned about. How about liabilities? Yes, public sector also have liabilities, which are financial liabilities, borrowings. Government will borrow from where? IMF. Or locally within Ghana, treasury bills. So loans and bonds issued to finance public projects. Some people buy government bond. Payables, amount owed to suppliers, contractors, and other. Yes, government owe these people. Then government also has a liability called social liabilities, which are pension, obligation to pay retirement benefit to the public sector employees. Then social benefits, which are obligation to provide social welfare benefits to eligible citizens. Government has contingent liability. When we say something is contingent, something that is dependent on the occurrence or not of an event. So potential liabilities that may arise depending on the outcome of specific events, such as what? Legal dispute or judgment what? Debt. Purpose of liability in the public sector. Financing public services. Yes, we go for loan or government borrows to finance public services. Then government also borrows or go for loan to manage its cash flow shortfalls. Then for economic stability and growth and social responsibility. Yes, government will have to pay social benefits to support its citizens. Okay. Now, what are some of the regulatory rules of public sector entities? So, before I mentioned some of the regulatory bodies in Ghana. I mentioned Controller and Accountant General, Bank of Ghana, Ministry of Finance. Is all right? Yes. So, we will have economic regulation. Bank of Ghana. What are their rules? These people regulate and supervise banks and other financial or money lending or taking institutions. They also implement monetary policy to ensure price stability and economic growth. Then they oversee payment and certain payment systems and currency issues. Yes, these people, they regulate all banks. Then when it comes to revenue generation by the government, it is solely the responsibility of Ghana Revenue Authority. they administer taxes and collect taxes. Don't forget that they don't enact laws to impose taxes on us, but they rather administer tax laws and collect the taxes that Parliament have imposed on the citizens. They also ensure compliance with tax regulations to increase revenue for public. Yes, GRA always organizes training for taxpayers and tax consultants and businesses to ensure compliance in order to increase government revenue. Now, let's look at the functions and powers of EOCO, or Economic and Organized Crime Office. I believe some of you might have heard EOCO over and over and over again. So, the Economic and Organized Crime Office, EOCO, is a government agency that is set up to do one specific thing, that is to combat economic and what? Organized crime. Now, its functions and powers are outlined in an act. Anytime you see it, means that it was set up by an act of parliament, which is called the Economic and Organized Crime Office Act 2010, Act 804. What do? They play a critical role in investigating and prosecuting serious crimes that affect economic and financial stability of the country. What are their main functions and powers? What are their main functions and powers? EOCO. Their function is to, one, investigate and, on the authority of the Attorney General, prosecute serious offenses that involve the following: financial or economic loss to the public or the state, money laundering, human trafficking, prohibited cyber activity, tax fraud, and other serious offenses. So the first one, investigate and, on the authority of the AG or Attorney General, prosecute serious offenses that involve the following. The second one is that they recover the proceeds of crime. So if you steal something, or you engage in a crime and you acquire some booty or some property, they recover it from you, whether it belongs to the state or belongs to private individuals, they'll take it from you. They also monitor activities connected with offenses specified in paragraph A to detect correlative crimes. EOCO take reasonable measures necessary to prevent the commission of what? Crimes. Then they disseminate information gathered in the course of investigation to law enforcement agencies like the police and others. So please, under the new syllabus, we are supposed or we are required to know the functions and powers of EOCO. And so we have to know what are the powers. So please, these are their functions. In exams, pay attention whether the question is asking you for the functions or the powers. One of the powers that they have authority, they have authorized officers to exercise the powers of the police. Yes. So they can arrest you. They can come and search your room. All right. So the executive director, deputy directors, and officers authorized by the executive director shall exercise their powers and have the immunities conferred on the police officer in the Criminal and Other Offences Procedure Act 1960, Act 30, the Police Service Act 1970, Act 350, and any other law related to the police officer. So they are authorized to exercise the powers of what? Police. they can request or they can write to you to request for what? Information. They can write to you by notice in writing, require a person or a rep of an entity whose affairs are to be investigated, or a person in the opinion of the executive director is a proper person to assist with what? Investigation. So they can write to you. They also have the power to search and remove documents. They can enter into your office, your house, search there, and remove any document that they deem important for their investigation. So the rest, you can just read and then prepare a short note. And there's also down to write all this. This is our explanation. Obstruction of officer of the office. So if an IOCO officer is coming to conduct a search or performing any duty and you obstruct or prevent them, what are some of the penalties available to you? A person who willfully obstructs an authorized officer from performing a function under this act commit an offense and is liable on what? Summary conviction. In the case of an individual, to a fine of not less than 250 penalty units, or to a term of imprisonment not less than 3 months. Yes, to prevent them, what will happen to you. Or if it's a company, to a fine of not more than 1,000 penalty units. Okay. The new ICAG syllabus also requires us to know the functions and powers of the Office of Special Prosecutor. You heard of him recently about Ken Oforiatta, isn't it? Okay. So the OSP in Ghana is a specialized independent entity. And they are established to what? Combat corruption and corruption-related offenses in the country. What is the law that backs them? They are under the Office of Special Prosecutor Act 2017, Act 951. Yes. The Act outlines their functions, powers, and the responsibilities of their office, which we are going to look at. So these are the main functions of the Office of the Special Prosecutor. The main functions: investigation and prosecution of corruption. So quite recently, we heard Kisi Ajabin, who is the Special Prosecutor, declaring the former finance minister a fugitive from what? Justice, and put him on a wanted list. It was because they were doing investigation of an alleged corruption and corruption-related offense. Preventive measures. In fact, they implement measures to prevent corruption in the first place by educating the public and making awareness campaigns. Asset recovery and management. Now, they can trace anything you have stolen and recover it. So the OSP traces, recovers, and manages assets and proceeds derived from corruption and corruption-related offenses. If you acquire anything fraudulently by defrauding the state, they will recover it from you. Then they collaborate with other agencies. Yes. They collaborate with other law enforcement agencies, anti-corruption bodies like IOCO, Ghana Police, Customs, Financial Intelligence Center. They collaborate with all these people in the performance of their duties. They advise and give what? Recommendations. Yes. They provide advice and recommendation to the government and public institutions on measures to combat corruption and improve transparency and accountability. Reporting and accountability. The OSP is also mandated in the Act to prepare and submit annual report to Parliament on its activities, including investigation that they are doing and the state of corruption in the country. The office also ensures transparency and accountability in its operation by keeping the public informed about its work in progress. So this is exactly what Kisia Jabin did some time ago when he held a press conference and declared the former finance minister Ken Ofori-Atta wanted. He organized training and capacity building for public officers, law enforcement agencies, and others. Let's look at the power. They have power to what? Investigate. Yes, they can investigate you. You have no question to ask them. They can also prosecute. They can arrest and detain you. They will keep you somewhere. They will not release you. They can freeze your assets. If you have some bank account somewhere, they can tell the bank that the bank shouldn't allow you to withdraw any money from the asset. They can confiscate and seize all your assets, whether being vehicle or any other tangible asset. Then, international cooperation. Have you heard of Interpol, international police? When Kisia Jabin said that if the former finance minister doesn't show up, he will either cause his arrest or force him to be brought to Ghana. Part of what he meant is that they can cooperate with other international bodies for you to be fished out wherever you are, so that you can't steal and run away wherever you are. Then surveillance. Yes, they conduct surveillance. You know, surveillance is like you enter a premises and there's CCTV. There's somebody sitting somewhere looking into the CCTV, monitoring everything that is going on in and within the premises as a surveillance. The OSP can engage in the OSP can conduct surveillance operations, including electronic surveillance, CCTV, to monitor the activities of suspects involved in corruption. Yes, you might think you have robbed the state of millions and working and nobody knows. One, they suspect you in monitoring you. By the time you realize you are in their office or in their handcuffs and grips. Now let's look at the functions and powers of Public Account Committee of Parliament. You see, so all these are state institutions that regulate financial management practices and safeguard public sector resources. So the Public Account Committee of Parliament, PAC for short, is a key oversight body responsible for ensuring accountability and transparency, and for what? Ensuring accountability and transparency in the management of public resources. They perform so many functions that are in accordance with laws passed by Parliament. Let's look at the primary functions of the Public Account Committee of Parliament. Examination of audit report. You see, the Auditor General or the Audit Service, I told you that they are mandated to audit all public accounts in Ghana. And after they have done the audits, they send their reports, including their recommendation and anything they found in the Public Account Committee. And these people will what? Examine the audit reports of the Auditor General on the public account of Ghana. So the Auditor General, he audits any public entity or any company, any institution that belongs to government, he audits it. And he will send his report to the Public Account Committee of Parliament. Please, take note that some of these things can be asked you in the exams. What are, or how does Public Accounts Committee ensure accountability and transparency in the management of public funds? They can ask you in the exams. 2, they scrutinize this report to identify instances of what? Mismanagement, irregularities, inefficiencies, malfeasance, misapplication, and misappropriation of public funds. They ensure accountability. How do they ensure accountability? Because Public Account Committee hold public hearings where officials from NDAs are called to account for their financial management. Normally, these things, they even show it live on TV, whereby you hear headmasters and accountants or business of various secondary schools reporting to Parliament, and there is a committee, and then the hearing and proceeding, everything is telecast live on public or national television. They also provide recommendations for action. Yes, based on its findings, the Public Account Committee makes recommendations to Parliament, the Presidency, and other relevant public institutions in corrective measures. It's all right. So they can ask you this in exams. You have 1, 2, 3. When you explain, fine. 4, they follow up on audit recommendation. When the Auditor General prepares his report and he finds anything that is not good and he provides a recommendation, Public Accounts Committee of Parliament will now come and follow up whether the recommendation the auditor gave has been followed. Then lastly, they promote transparency. Now, per the ICA Public Sector Accounting Syllabus, the new one, we are also required to know the functions or powers of Financial Intelligence Center. Financial Intelligence Center. Yes. So this Financial Intelligence Center, what they do is that they fight against money laundering, terrorism financing, and other financial crimes. And there's a law that backs them. They operate under the Anti-Money Laundering Act 2010, Act 1044. This act outlines their powers. Let's go and look at the main powers for the Financial Intelligence Center. They request, receive, analyze, interpret, and disseminate information concerning suspected proceeds of crime and terrorist properties. Yes. Process of crime and terrorist purposes, like those the ISIS, Al Qaeda, Taliban, any terrorist group you can think of. They also take measures that are necessary for the enforcement of United Nations Consolidated List. They monitor and give guidance to accountable institutions, supervisory bodies, and other persons in the discharge of their duties and their compliance with the Act. Yes, so these people can perform functions and even give guidance or advice to, let's say, Bank of Ghana, to IOCO, and other state institutions in the discharge of their duties. Then they coordinate and supervise activities of investigation and suppression of what? Money laundering, terrorist financing, and financing of the proliferation of what? Weapons of mass destruction. Yes. So where, let's say, during election, a group of people outside somewhere, Ghana, wants to bring in weapons into the country, and these weapons are being financed by a particular politician or whatever. These people, we call them Financial Intelligence Center. They are mandated to coordinate and supervise the activities of the investigation and suppression of such money laundering and terrorist finance. They will also coordinate with the GRA to ensure compliance of the Act by designated non-financial businesses and professions. Some businesses and people who do not want to pay taxes and are in the country and engaging in serious tax fraud and all that, they collaborate with the GRA, more especially customs, to clamp them down. They also retain the information in the manner and for the period required under the Act. They inform, advise, and cooperate with investigating authorities, supervisory bodies, revenue agencies, intelligence agencies, and foreign counterparts. So these are the main powers for the Financial Intelligence Center, which operates under the Anti-Money Laundering Act 2020 Act 1044. Okay, let's look at the Internal Audit Agency Act 658/2003. I shared this piece of legislation with you as well on the WhatsApp page. And pay attention to this one too. They've been asking it in the exams. So this Internal Audit Agency Act is an act that is established as an internal audit agency, as a central agency to coordinate. Look at what they do. Coordinate, facilitate, monitor, and supervise internal audit activities within MDAs and MMDAs. Yes. Now, these people, what it means is that, you see, all government institutions, be it a ministry, a department, agency, metropolitan, municipal, and district assembly, are supposed to have internal audit as part of their finance team in order to ensure what? Or in order to secure quality assurance and internal audit within these institutions of the state, to provide the board of the internal audit agency and to provide for connected purposes. So that's how come you see all public offices having an internal audit department. Now, what is the objective of the internal audit agency? Their objectives, as I've already said, is to coordinate, facilitate, and provide quality assistance for internal audit activities within MDAs and MMDAs. Okay. Now that we know their objective or objects, what are their functions? The agency shall set standards and procedures for the conduct of internal audit activities in MDAs and MMDAs. Then they shall also ensure that financial, managerial, and operating information reported internally and externally is accurate, reliable, and timely. So before the Auditor General will come, audit service, this internal audit agency must ensure that a public sector entity, financial, managerial, and operating information that are internally reported and external is accurate, reliable, and timely. Then the agency also shall ensure that the financial activities of MDs and MMDs are in compliance with what? Laws, policies, plans, standards, and procedures. Yes. So I mentioned Public Procurement Act, I mentioned Financial Intelligence Center, I mentioned IOCO. What if there is somebody in the public office engaging in any of activities of money laundering, fraud, tax, and or let's say they are not following what the Public Financial Management Act says about budgeting and all that? It is only the internal audit agency that will ensure full compliance. These are also ensure that national resources are adequately safeguarded. by the institution of what? Internal controls. Okay, so the rest are there. Now, anytime you see that you are studying something about a state institution, sometimes it is more likely the examiner can ask you the membership of the board for that particular institution. So, for example, you could be asked, what are the number that makes up the membership of the board of the Ghana Revenue Authority or of the Public Procurement Authority? These things sometimes they can answer. So let's look at membership of the board of the Internal Audit Agency. The board shall consist of the following members appointed by who? The president, acting in consultation with the Council of State. 1, a chairperson. 2, minister responsible for finance or a rep. 3, a minister for local government and rural development or a rep. The next one, 4, the chairperson of Public Service Commission or a rep. The Director General of the agency appointed under Section 12 of this Act. Then 2 other members appointed from the private sector. And lastly, 2 professional accountants, each with not less than 10 years of experience. Please, in an exam case scenario, you could be asked about the membership body of a particular state institution or a board. This board, what are their functions? They establish appropriate practice for what? Effective and execution of the agency. They also secure achievement of the object of the agency, and they approve plans for the development and maintenance of efficient internal audit for bodies and institutions to whom this act applies. There is a Director General of this agency. What does it do? They shall be appointed by the President in accordance with Article 195, Clause 1 of the Constitution, an officer who shall be the chief executive of the agency and be designated the Director General. What does he do? Subject to the direction of the board on matters of policy and subject to this act, he shall be responsible for the day-to-day management and administration of the agency. 1. 2, and he may make such decisions and exercise powers that are necessary for the attainment of the objectives or objects of the functions of what? The Internal Audit Agency. Without limiting the above, the Director General shall also secure the execution of the policies of the board. Is that right? Shall also make regular reports to the board. Shall provide data, statistics, and advice necessary. Then perform such other duties as the board may direct. So please, we are supposed to know everything about the Internal Audit Agency Act. For the purpose of exams, these things are worth knowing or noting. Then we have Internal Audit Unit for MDs and MMDs. Remember, I mentioned that all public sector entities are supposed to have internal audit units. So establishment of internal audit units. Okay, there shall be established in each MDA and the internal audit, which shall constitute a part of the MDA or MMD. Yes. So if you go to your district assembly, any ministry, Ministry of Education, Ministry of Health, they all have them. And there shall be appointed for each internal audit personnel required to ensure an effective and efficient internal auditing of MMD concern. The internal audit established shall, in accordance with this act and standards and procedures provided by the agency, carry out an internal audit of each MD and shall submit reports on the internal audit it carries out to the Director General of the agency. Yes. So you see, we look at the Director General here. So every internal audit agency of an MDA shall submit reports on the internal audit it carries to the what? DG or Director General of the agency. All right. The internal audit unit of an MDA shall submit a copy of its internal audit report to its management body and such other person as is required to submit the report. Okay. The autonomous bodies of the Constitution shall be subject to standards and procedures of the agency and shall have internal audit units. Yes, when I say autonomous body of the Constitution, these are state institutions that are autonomous or have authority to operate on their own without interference from government, and they do not receive any subvention from the national budget. Okay. A copy of the internal audit report of an MDA shall be submitted to the Regional Coordinating Council. A Regional Coordinating Council shall furnish the agency with a copy of the internal audit report submitted. The Audit Report Implementation Committee, please pay attention here. The Audit Report Implementation Committee of MDAs and MMDAs, as established under Section 30 of the Audit Service Act, Act 578, shall be responsible for the implementation of the recommendation of the internal audit report. Yes. What does this mean to you? The Audit Report Implementation Committee of all MDs and MDs, as established by the Audit Service Act, shall be responsible for the implementation of the recommendation, of the internal audit report. It's very simple. Unlike what the Audit Service or the Auditor General does, for the implementation of the recommendation, the Public Account Committee of Parliament normally follows up on the recommendation. But when it comes to internal audit, it is the function of the Audit Report Implementation Committee. Pay attention to this, please. Okay. Then we have the Audit Service Act 2000, Act 584. Here too, we are supposed to know the governing body of the Audit Service. The governing body of the Audit Service shall be the Audit Service Board, referred to in this act as the board. What is the composition of the board? The board shall consist of a chairman, a chairman, and 4 other members appointed by the president, acting in consultation with what? The Council of State. So a chairman, 1, and 4 other, making what? 5. Then the Auditor General, 6. The head of civil service, 7. Is that it? All right. So you have to note it. A chairman, 1, and 4 other members appointed by the president, making 5. The Auditor General, 6, and the head of the civil service, 7. What are the functions of the board? What are the functions of the board? The board shall determine the structure and technical expertise required for efficient performance. Yes, they shall determine the structure and expertise required for what? Efficient performance of the service. That is straightforward. 2, they shall ensure that auditing activities of the audit service are spelled out, as spelled out in the Act, are carried out. Ensure that auditing activities of the audit service, as spelled out in the Act, are carried out in accordance with best international practices. Example, the ISA, International Standards on Auditing, or other best practices. Then they shall appoint officers and other employees of the service other than the Auditor General. So they can appoint an Auditor General, the president. Then they determine the terms and conditions of service of officers. Yes. Audit of public accounts generally. Like I mentioned, it is the responsibility, or the Auditor General has the power to audit all public accounts of Ghana. Is that right? So the public accounts of Ghana and all public offices, including the court, the central and local government and administrations of the universities and public institutions of like nature of any public corporation or other body or organization established by an act of parliament shall be audited and reported on by the what? Auditor General. Take note. For the purpose of the above, the Auditor General or any other person authorized or appointed for the purpose of the Auditor General shall have access to all books, records, returns, and other documents, including documents in computerized and electronic form relating to or relevant to what? The account. So name any public sector institution you know. The Auditor General that audits them. The Public Account of Ghana and all other person and institution referred to, including computerized financial and accounting system and electronic transactions, shall be kept in such a form as the Auditor General shall approve and shall be subject to review by what? The Auditor General. So we are going to look at any head of public institution or other body subject to auditing by the Auditor General who fails to comply with the provisions above is liable to set out with the cost of any loss occasioned by effective or deficient internal control of auditing. When we say somebody is set out, it means you'll be asked to pay back. Now, before we proceed, let's look at this. An internal auditor of an organization or body to which the above applies shall the public account of Ghana, okay, a copy of the above to which the above applies shall submit a copy of each report issue as a result of internal audit to be carried out to the Auditor General. All financial and accounting system in respect of accounts provided in the paragraph 1 above shall be subject to prior approval of the Auditor General. Okay. Now, Auditor General, what are some of the things they do? Audit of what? Foreign exchange transaction. The Bank of Ghana shall not later than 3 months after the end of the first 6 months of its financial year and after the end of the financial year submit to the Auditor General for audit a statement of its foreign exchange receipts and payments or transfers in and outside Ghana. Yes. So you see, the Auditor General here is going to audit the Bank of Ghana. And the Bank of Ghana is required not later than 3 months after the end of the first 6 months of its financial year. And at the end of this financial year, submit to the Auditor General for audit a statement of its foreign exchange receipts. The Auditor General shall not later than 3 months after the submission of the statement refer the above, submit his report to Parliament on statement. Yes. So this means is that you see, after the Auditor General has audited you and provided his recommendation as an oversight responsibility, it is submitted to what? Public Accounts Committee of Parliament for questioning, queries, and others. Examination of account. The Auditor General shall examine in such manner as he thinks necessary public and other government accounts and shall ascertain whether, in his opinion, the account has been kept what? Properly. All public monies have been fully what? Accounted for. Monies has been extended for the purpose for which they were appropriated. And then essential records are maintained and rules and procedures applied are efficient. Then programs and activities have been undertaken with due regard to what? Economic efficiency and effectiveness. Yes. So these are some of the functions the Auditor General performs on behalf of the auditors, the audit service. So they audit what? Foreign exchange transactions. They examine accounts. Next, they also audit statutory what? Corporations. When I mention statutory corporations, they are all those independent and autonomous state bodies. So statutory corporation and state enterprises or public commercial institutions operating under its own enactment. The Auditor General or any represented by him shall, upon examination of the account of the corporation, will express its opinion as to whether account presented fairly financial information in accordance with applicable statutory provisions stated accounting policies of government and in accordance with general statutory accounting standards. So they audit statutory corporations, all state-owned enterprises. Let's look at independent and powers of the Auditor General. The Auditor General shall not be subject to the direction or control of any other person or authority. Yes, nobody controls him because he audits everybody. 2, the Auditor General may disallow any item of expenditure which is contrary to law and such as, yes, if it comes to audit you and you have incurred something, they will tell you that, no, this thing shouldn't have been procured and therefore you have to pay back. So, summary. Both internal and external audit play a major role in ensuring effective financial management by providing independent and objective assurance to stakeholders, you and I, of public institutions, the administration and management of various government programs, projects, and public resources. Is all right. The audit activities are reported to stakeholders through audit recommendations. That forms an important part of the audit report. Audit recommendations, when implemented by management, improve public financial management system and ensure a robust internal control environment to strengthen accountability in public resources. Is all right? Okay. So, professional skepticism and judgment when reviewing ethical issues in the public sector. Now, when we say professional skepticism means that when you are confronted with a situation or whenever you are auditing somebody or an issue comes to your notice, you have to exercise best judgment in your approach, in the way you handle information. So professional skepticism, in short, means that you should trust everything you are told, but verify. So trust, but verify. Or professional skepticism also means that do not be overly suspicious and do not be overly trusting. So you don't suspect information that comes to your notice, or you don't suspect issues or events or circumstances, and you don't also trust it too much. You trust, but you verify. So what are some of the steps to demonstrate professional skepticism? You have to understand the particular context. Here, you gather as much as information you can in order to understand the context. Then you also have to understand all the people involved. After you have understood the context, you now evaluate the information before you. You do this by assessing how reliable the information is. Instances of biases. Then you ask critical questions. Where there are assumptions, you challenge the assumptions, whether they are real. You go ahead to seek evidence, or you obtain evidence and supporting document to back the questions you are asking. The next one is to maintain objectivity and free mind. Here, you avoid any instances of prejudice and preconception or misconception, and try as much as possible to stay neutral and unbiased. Then, you consider the ethical principle of the situation before you by exercising a high level of integrity, fairness, and you keep the information as confidential as it deserves, unless you are being required to disclose by a higher authority. Then you analyze the implication of your action, looking at short-term and long term, its consequences. The next is also to seek multiple specific perspective, sometimes referred to as seeking a second opinion. You consult with colleagues, engage with people or experts in the field who know better than you might. So diverse opinion, second opinion. Then all these things, document your processes, keep records, and be transparent. Then finally, you make a decision. So making a decision, you reflect and learn. You reflect and learn. So let's look at a case scenario whereby a professional skepticism can be exercised. Example scenario in the public sector of Ghana. The scenario: a procurement officer in a government ministry is suspected of awarding contract to a company owned by a close relative, bypassing the standard procurement procedure. You see, the standard procurement procedure is for you to invite tenders from multiple suppliers so that they will come and bid for the contract in order for the procurement process to be competitive. But in situation whereby the contract is to a company owned by a close relative, there can be instances of what? Bias. Where there is bias, there will be inefficiencies, there will be ineffectiveness, there will not be economy, and in the end, public funds will not be used judiciously for the benefit of all. So application of professional skepticism and judgment. Understand the context. What do we mean here? Here, you have to review the Public Procurement Act of Ghana and the Code of Conduct for Public Procurement Officers here in Ghana. Identify all the people involved, including procurement officer, the relative company, and others. How do you evaluate this information? Assess the reliability of procurement documents and contract awards. Maybe the contract award you're talking about is a different thing. It doesn't even relate to a relative or whatever. Identify potential biases in the procurement process. Here, the next thing is to ask critical questions. Why were standard procurement procedure bypassed? Yes, why were they bypassed? Is it because of an interest the officer has? Or because he wanted to engage in fraud or something? Is there evidence of conflict of interest or favoritism? Yes. These are questions you ask. The next, you maintain objectivity. Avoid assuming guilt based on the relationship alone. So it might happen that the relative went through the procurement process truly and won the contract. So you don't begin to judge them and feeling that they are guilty. Then you focus on the evidence and adherence to procurement. Then consider ethical principles. Here you ensure integrity and fairness in evaluating the process. Maintain confidentiality of sensitive information. Yes. Analyze the implication. Consider the impact of procurement decision on the public trust and perception of government integrity. Evaluate, seek multiple perspectives, consult colleagues in the procurement department, and seek legal advice. Document your process. Keep detailed records of the investigation, including evidence. Everything. Make a decision, reflect, and learn. Please, by and by, we have ended the topic that says that regulatory and conceptual framework of public sector reporting in Ghana. In our next meeting, we'll be looking at the first one on the list, which was the public financial management cycle in Ghana. So let me take you there. That is the A, overview of public financial management cycle in Ghana. This forms 20% weighting in the exams. So I'm saying today that ended regulatory and conceptual framework for public sector accounting in Ghana. Now, watch the video, prepare your notes. If you do not understand anything, in our next lecture, make your questions ready and ask me in our next lecture. Read everything that I have given you. Read and read. And when you have the question, you ask. So we end here, and until we meet again next week, which will be the 26th of April. Bye.